Okay, everyone, we start with the revision of audit of banks. Audit of banks, as you know, is divided into 4 parts. Part A, Part B, Part C, Part D. Part A is nothing but in relation to advances. Part B was expenses. Part C is in relation to revenue. And Part D is in relation to other areas. Okay, we'll be doing in a part by part manner. Let's go to Part A first. We are entering now advances. What are the areas that the auditor should check in relation to advances? Let's see it one by one. Hear me out. Question number 1 is, what are the various natures of security? Security can be either primary security or it can be collateral security. Primary security is the main security of the bank that the bank takes from the borrower, and anything over and above that, so to ensure that adequate margin is there, that is called collateral security. Collateral security is also called as additional security. Question number 2 for us was examples of most common type of securities. In that, I had told in the class that out of these points, you can write any of the 6 points that you like. Okay, so ensure that you're learning 6 of these. Very basic example, like your gold ornaments, bullion is one very common example. People can take loan, give gold as security. Life insurance policies is there, plantations are there. You can add any 6 of these. Okay, is question number 2. Question number 3 that we had done, everyone, was in relation to what are the modes of creation of security. We had done something called as formulas: pledge, hypothecation, mortgage, lien, assignment, set off. Pledge is when the bank is giving loan and accepting movable asset as security, and the movable asset will be in the bank's possession till the time the loan gets over, loan period is over. What is hypothecation? Hypothecation is when the bank is giving loan, accepting any movable property as security, but the movable property will be in the possession of the borrower and not the bank, and this is called as hypothecation. Mortgage means whenever the bank gives a loan and takes immovable property as security, that is called mortgage. It can either be registered mortgage or equitable mortgage. What is a registered mortgage? Whenever there is a mortgage in which the party which is taking the loan and party which is mortgaging the asset, it transfers the asset in the bank's name first, and that is called mortgage. That is called registered mortgage because the property is getting registered in the bank's name. What is equitable mortgage? Equitable mortgage is when there is simply mere delivery of title deeds. There is no change in the ownership name. The borrower simply, the mortgager simply gives the property papers to the bank. That's it. There is no change in the name there. Okay, that is called equitable mortgage. So that is basically mortgage, pledge, and hypothecation, which we had done. Then we had done something called as form last. Last is nothing but lien. Lien is when you give a person the right to retain control over the asset. That is called lien. You have something called as assignment. Assignment means, we had done this example in the class, if you remember. We had done this where C had told A to pay for him. So A paid for C. Next day, A had told B to pay for him. So in this case, C has to now pay 30 to A. A has to now pay 30 to B. So C is A's debtor. C is A's debtor. A will transfer C as a debtor from A to B. So A is transferring his debtor to B. So B becomes the assignee. B becomes the assignee. Now B can go and recover 30 rupees from C. Okay, that is basically how this works. This is called assignment. When one debtor, your debtor is transferred to some other person. Okay. Then after that, we have done something called as set off. Set off is basically when a person has taken a loan from the bank, let's say of 6 lakh rupees, and he already has a fixed deposit with the bank of 10 lakh rupees. The bank will love such kind of transactions because even if the bank gives a loan of 6 lakh rupees in this case, the bank can easily set it off if the person doesn't pay this amount. This is called set off. This is called set off. Okay. So pledge, hypothecation, mortgage, lien, assignment, set off. These are the modes of creation of security. This area, modes of creation of security. Yeah. We are in the next area that is called as very nice area called prudential norms. Prudential norms, I'll take you to directly to the chart. We have done this. That is note ag plus 4 areas. 4 areas was also rags. Okay, so let's see it one by one. Prudential norms, very important area for your examination. Let's do it one by one. Please see here. When is an asset called as a non-performing asset? When the principal or interest is overdue for more than 90 days, or if the bill is discounted and on the due date, the bank goes to the drawee to collect the bill. The drawee also doesn't pay the amount and it is due for more than 90 days from that day. Again, that can be called as a non-performing asset, or if any asset which is out of order is called non-performing asset. When is the asset out of order? For that, we had done this example, if you remember. Sir, whenever an asset, the sanction limit is, let's say, 5 lakhs, but the person has taken more than, sorry, sanction limit is 5 crores. The person takes more than 5 crores as the amount, and it stays that way for a long time. In that case, we say that it is out of order. Hence, it becomes an NPA. Or if a person has taken less than the sanction limit, 5 crores is the sanction limit, person takes 3 crores worth of drawing he has done, and there is no credit in the principal operating account. There is absolutely no credit in the principal operating account, no credit in the current account. Then we call it as out of order. Or if the person has taken less than the sanction limit and credit is there, but the credit is so less, you can see the values here, the credit is so less in value, it is not even covering the interest part. In that case, we call it as what? Out of order. Any out of order item automatically becomes an NPA. This is what we had done. Okay. So in no tag, we did N, that is called NPA. Now we are entering O. O is called overdue. For that, we had done this chart, if you remember. In this, we had seen, sir, in this, whenever there is a due date, the person has to pay the amount within 90 days. If the person doesn't pay the amount, we call that asset as an NPA. NPA, as I told you, is a category. Inside that, there are various subcategories. The first subcategory is called substandard asset. It is for 1 year from the date it became an NPA. It is for 12 months, that is 1 year from the date it became an NPA. During this period, we create a provision of 15% on the asset. So if the loan amount is 1 crore and if the entire loan is not paid, we'll create 15% provision on this 1 crore basically. Okay. Second, after 12 months are over, so this big red line I'm drawing here, now all the calculations will be from the big red line only. So after the substandard period is over, what is that D1 period? D1 period is 1 year from that big red line. So for a period of 1 year, that asset is called as doubtful category 1 asset. In the doubtful category 1, we have to see whether it is secured or unsecured. If it is secured, then we have to increase the provision to 25%. So basically, we had already created provision of 15%. We are increasing it to 25%. And in the case of unsecured, we are increasing the provision to 100%. Okay. Next, if it is D2 category, that is basically again from the big red line. If it is 1 to 3 years, that is basically year to year 3. In that case, if it is secured, then the provision will increase to 40%. So you understand here, it was 15% earlier, it became 25%. Now it becomes 40% in this case. And in this, and this 100% provision will remain as 100% in the case of unsecured asset. If it is more than 3 years from the big red line, in that case, what they are saying is, we have to see whether it is secured or unsecured. If it is secured, in that case, this 40% will increase to 100%. If it is unsecured, it will stay at 100%. This is what we had seen. Yeah. In the duration, which I've shown in the dark blue line, suddenly, anytime, if SIR, that is statutory auditor, internal auditor, or in RBI inspection, or the bank itself feels that this money is not going to come, in that case, they should treat it as a loss asset and immediately create 100% provision there and then itself. Are you there with me, yes or no? This is called overdue. Then after that, my dear student, we had done something called as tickling matters. T was tickling matters. I'll just show you the basic. We had done tickling matters. I told you this. Tickling matters are the best kind of security for the bank because these will never become an NPA because bank can easily recover the amount from the borrower. Tickling matters are what? Term deposit, Indira Vikas Patra, Kisan Vikas Patra, life policies, national saving certificates are your tickling matters. These are supremely safe. If tickling matters are given as security, banks feels very, very comfortable because the bank can recover not only the asset, but also if there is any interest income on that, in that case, okay? That completes your T. That is basically tickling areas. Then we have done erosion. Erosion, if you remember, we have done this diagram. Let's see erosion now. Let's see this. Sir, if a person gives his property papers here and the bank assesses the value to be 1.2 crores and bank gives a loan at loan of 1 crore in this case. But if some situation happens in such a manner that the value of the property drops to, let's say, 40 lakhs, so 1.2 crores into 50% is 60 lakhs. Value of the property has fallen below that 50% mark. Again, 1.2 crores, 50% is 60 lakhs. Value of the property has gone down to 40 lakhs, so below 60% mark. In this case, this loan that we had given or whatever asset is there, we have to treat it as a doubtful asset. We have to treat it as a doubtful asset. Next, If a person has given the bank his property papers and he wants a loan from the bank, and the bank has assessed the property at 1.2 crores, so you can see that enough margin is there. But in this situation, suppose if a problem happens in such a manner that the value of the property drops down to 6 lakhs, and suppose this person has already paid a 20 lakhs till now, so 80 lakhs is remaining outstanding in his account. So this is the outstanding in the borrower account. What we have to do is we have to take 10% of this. 10% of this will come to 8 lakhs. And the property value has dropped down to 6 lakhs. So the question is, has the property value gone down even below 10% of the outstanding value? The answer is yes. In that case, RBI has said in the Prudential norms that this 80 lakhs, which is an asset for the bank, it should immediately be treated as a loss asset, and we should create 100% provision. 100% provision. Going in the mind, yes or no? Simple? Comfortable? Use this for quick revision, okay? Use it for your benefit. Next is then we did something called as agricultural advances. What is agricultural advances? Very simple. So in note ag, we are right now at AG, agricultural advances. In every state, you will have a state level bankers committee which will decide which crops are long duration crop, which crops are short duration crops. Crops which take more than 1 year between seeding to harvesting, they take more than 1 year. They are called as long duration crop because their crop duration is more than 1 year. And crops which are not long duration crops are called short duration crops. So those are not long duration crops, are called short duration crops. If a farmer takes a loan for growing a short duration crop, he has taken a loan here, he'll put the seeds here, he'll harvest here. This is one crop season. Next time regarding the same crop, seeding, harvesting will be here. As you know, it will be as per the Kharif season, Rabi season, as I taught you. You understand here, the farmer for short duration crop will get 2 crop seasons to pay the loan amount. That is this crop season and this crop season. So he has this much period to pay the amount. But if he still doesn't pay the amount, in that case, it will become an NPA. In the case of long duration crop, when the farmer takes a loan, the farmer will get one crop duration to pay the loan amount, one crop season to pay the loan amount. If he doesn't pay the loan amount in that one crop season for the long duration crop, in that case, it will become an NPA. Are you there with me, yes or no? This completes your note ag. What are the 4 areas? Let's go for it one by one. Let's discuss it quickly. Let's see this. Accounts regularized near the balance sheet date. What does it mean? It means, sir, any asset turning NPA just before the year end is not a good news for the bank, because it means bank has already recognized interest income, and if that asset becomes an NPA just before the year end, bank will have to pass reverse entries, and that income which they are showing on interest income credit side, it will have to be debited. So bank will now have to show lower income which they will not like. They will also want to impress the shareholders. So the bank in this case will do a trick. What it will do is, it will do some manipulation in the accounts in such a way that the asset becomes an NPA or the loan becomes an NPA not before the year end, but after the year end. So in that case, what happens is the reversal is not required in the previous year. It is required only in the next year. So at least in the previous year, you need not reverse the transactions. And because you need not reverse the transaction, your income will show inflated income will be there. Hence, your profit will be shown at a higher figure than what you should show. Banks can do this manipulation. Hence, it is very important for the auditor to ensure to check the near the year end transaction, the entries which are there. The auditor should check them very, very closely. Are you there with me? That is what we saw when we did accounts regularized near the balance sheet date. Okay. I'm telling you again, in class, we had done good extensive diagrams in this case. We are just doing quick recap now so that you get the points. It is assumed that you must have studied and then you're sitting for a revision purpose. Next. A is called agricultural advances, but in the case of natural calamities, if you know, I told you yesterday that there can be natural calamities because of which a farmer will not be able to grow the crops. In that case, and if he has taken a loan, he'll not be able to pay the loan to the bank. The banks in this case have to give renewal, extension, fresh loan for existing loans so that farmers are getting some kind of benefit in this situation. Next, government guaranteed advances, go for it. You guys are already champions at it, go for it than me. Government guaranteed advances can be given either by the central government or the state government. Central government guaranteed advances can either be non-repudiated, repudiated. If it is not repudiated, then the asset, the principal has to be, will be treated as a standard asset, but the income will be treated as an NPA. But if it is repudiated, in that case, you understand that the asset will be NPA and the income also we'll have to reverse it. So it is because it is also an NPA. In the case of state government guaranteed advances, it will be NPA and NPA for asset and income. Simple, very simple table. Finally, we did staff loan. Yesterday, we understood this matter. Tell me what is the complexity in this. Staff loans, especially for housing loan, they get some benefit. What is the benefit? When they pay the installment, that installment can be taken entirely as principal. So the principal amount will get down faster. So in the end, in the staff loan, the staff will pay lower interest overall. So that is what the auditor should be very careful. If staff loan is given, first of all, we should check whether what is the benefit that the staff is getting. And second, whether it is disclosed properly under other assets by the bank. That is what the auditor needs to check. Okay? That is what we saw in RAGs. This completes our question number 4. That is prudential norms. Okay. So 4 questions done till now. That is prudential norms. Let's go to question number 5. This was in relation to computation of drawing power. In that we did 2 parts here. First is the theoretical part. Second was a computation part. Let's do the theoretical part first. Hear me out. Look here. See. First of all, whenever the bank decides the drawing power or the sanction limit, the bank has to ensure it is within the limit. If it exceeds the limit, in that case, the person in the bank has to report to the head office or the management. Normally, whenever a businessman comes to ask for drawing power, in that case, we should check the current assets very, very carefully, especially the current stock statement. Especially for large borrowing, we should check the current stock statement within the last 3 months only. Any current stock statement checked which is before 3 months, that will be considered to be as irregular. Okay. Next, the bank will check the stock statement, quarterly reports, annual report, and monthly stock statements to decide the drawing power limit. We have to check the extant guidelines, which are nothing but the policies made by the directors in relation to the drawing power and the sanction limit. And finally, stock audit is compulsory if the exposure, that is the risk taken by the bank, loan given by the bank, is more than 5 crores. And also in other cases when the auditor recommends, non-lead banks should take the stock audit report from lead bank in the case of syndicate or consortium loans. Consortium basically means when group of banks come together to give a loan for a common purpose. Yesterday, we had done this area where we saw that India Infrastructure Limited wanted loan of 1,000 crores and it was divided between 3 different banks. Okay, in that SBI was the lead bank and Axis Bank and HDFC were the non-lead banks. The non-lead banks will take the stock audit report from the lead bank. We should also carefully look at the comments given by the borrower, comments given by the auditor, This also we should check it very, very carefully. Easy. This was the theoretical part of computation of drawing power. Now we do the calculation part. So look here, see, please here. Try to remember what we had done. Let's go for it one by one. See whether it is clear or not. Let's go for it. Tell me. We'll take raw material stock. Less the creditors. Tell me, why are we separating the creditors? Because we have to pay them later only. So not required. So we'll subtract it. So now we look at the paid stock. But in paid stock, the supplier's margin is there. So we have to subtract the supplier's margin and you get A. That is the value that you get. For the B computation, what do? We take the debtors. But insincere debtors, I don't want my client to produce goods for insincere debtors because then he may not pay to me also if the debtors don't pay him. You understand in this case, we'll take total debtors, less debtors which exceed the credit period, that is insincere debtors. And debtors which are sincere, we'll get them here. But to sell the debtors, our margin is included. So we have to reduce our margin. So margin has to be included in this case. And then after that, we'll get the B. A plus B becomes your drawing power limit. It becomes your drawing power limit. This is what we did. Okay. This completes this area till this point. Okay. Let's go further. This is computation of drawing power. Then we did the next area. This was question number 6, 7, 8. This was all in a flow. So we did this area 6, 7, 8. Let's do it one by one. Let's understand it properly. Let's see this. First is question number 6, evaluation of internal controls. In that case, what all will the auditor check? Auditor will check the credit worthiness of the borrower. He will check whether all documents are there in place or not. He will check the terms and purpose of the loan. He will check whether security is given or not. If security is given, whether value-wise it is sufficient or not. And if share securities or any other debentures are given as security, in that case, whether it is in the name of the bank and whether it is registered with the bank or not, this is what the auditor will check. If a businessman comes for a loan, the bank will normally take goods, that is inventory, as security. Entry should be made in the drawing power register. It should be within the limit. It should not be in excess of the limit. For large borrowings, we will check more frequently, and for others, the checking should be done by the bank at least once a year. Okay, this is the flow that we did. Then we went to our dear answer. What is this? What evidences will we gather regarding advances? Let's go for it. Balance sheet. We did that bald man story. Let's go for it. First is balance sheet. As you know, that is hair. So let's do the story first. First, bald man goes to the haircutting salon, and then he says that I'm here for your services. The barber says, please sit, have a seat. The man reads through some documents. After that, the customer who was sitting, he leaves. So the man now is going to sit on the chair. And in that case, what happens is the barber now says, I'll now do my duty. The barber removes the cap. There is no hair. After that, the bald man, in this case, says, don't worry, take this oil and appropriately, and V and A, valuation of advances should be appropriately and properly applied. And after that, the barber experiences that hair is touching his finger, so there's recoverability. After 10 minutes, the hair grows like you and me. So the man discloses himself as a star. When he's about to leave, the barber gives him the cap. Cap is acting as a provision. So the story connected like this. The man goes to the barber shop. It was balance sheet. So in barber shop, you cut your balance sheet. Next is he sits on the sofa, reads the documents, or loan documents. Barber says, I'll now do my duty. Amount due. Then he removes the cap. He sees no hair is there. So unrecorded advances. Then the barber valuation of advances should be appropriately and properly applied. So we have appropriately and properly applied. Small hair grows, recoverability. The man classifies, discloses himself as a star. Statutory requirements, accounting policies, regulatory requirements. And finally, the cap acts as a provision. Whether provisions as per RBI prudential norms are complied with or not, that is what the auditor should check. Okay. Next is what audit procedure should be done to obtain evidences. Let's go for it. First is validity. Validity, if you remember validity, then that is basically your validity of the loan. Then Aadhaar card the man shows, that is called loan documents. Then apart, did you do any kind of operation? There's operation here. My wife comes, wife does what? Tell me. Existence, enforcement, valuation of security. So your existence, enforcement, valuation of security. And then the husband says, no means norms. Then the wife says, thank you, Anna. Anna means analytical procedures. And after that, the hair has grown large. So large account we should check. Problem account also we should check unless they are insignificant. And the rickshawalas pass adverse comments. RBI inspection, internal inspection of the bank, or concurrent auditors, they pass adverse comments. These accounts the auditor should definitely check. Okay. This completes our audit of advances part. First 8 questions we have done. Okay.